Welcome back to Investing Talk Podcast.
It's great to be back. And today we're looking at something that feels a little bit like science fiction, but the numbers and the partners involved are very real. We are talking about Datavault AI.
Ticker symbol DVLT.
That's the one. Now, most people might look at this and just see another tech penny stock. It's trading around, what, 71 cents?
Yeah, about that.
But if you look under the hood, this isn't just a tech play. This is a high-stakes bet on the tokenization of everything. We're talking about a company that has issued guidance suggesting they are on the verge of a massive revenue explosion.
Okay, let's unpack this immediately because I have to play devil's advocate here.
Yeah.
When you say revenue explosion, we need to be specific.
Of course.
I'm looking at the data, and they're claiming they're going to jump from $30 million in revenue in 2025 to $200 million in 2026.
That is the guidance they've put out, yes.
That is a 567% year-over-year growth trajectory.
Yeah.
That is, that's ambitious, to put it mildly. Usually when I see a penny stock claiming that kind of jump, my alarm bells start ringing. It just sounds too good to be true.
And it absolutely requires skepticism. You're right to flag that.
It's a moonshot.
But here is the hook. This isn't based on, hopes and dreams or some vague roadmap. This growth is backed by hard contracts and massive partners like IBM and Silex.
All right, we are going to get into those partners and see if the math actually holds up, because extraordinary claims require extraordinary evidence. As usual, before we start, subscribe, like, and comment to this video to support the show. We really appreciate you tuning in. So let's dive into these fundamentals. How do they plan to get from 30 million to 200 million without some kind of miracle?
It comes down to three specific buckets. First, you have their data science division. This is where the buzzwords, they actually mean something. They are leveraging Web 3.0 for data tokenization and creating what are called digital twins.
Okay, stop there. Digital twins. That sounds great in a press release, but what does it actually mean for a business? What are we talking about here?
No, it's not avatars or anything like that. Think of it more like a digital passport for a physical object.
Right.
Let's say you have a vial of incredibly expensive, life-saving cancer medication.
Right.
A digital twin is a unique, unforgeable digital record that tracks that specific vial from the factory to the truck to the hospital, all the way to the patient.
So it's about provenance, proving it's real and hasn't been tampered with.
Exactly. And the money here is in the pharmaceutical sector. This is their biggest opportunity. They estimate the tokenization opportunity in pharma across drug sales and diagnostics is worth about $2 trillion.
$2 trillion? That's a staggering number.
It is, but think about the problem they're solving. Counterfeit drugs, lost shipments, supply chain inefficiencies, these cost pharma giants billions. Datavault isn't trying to take the whole market, just a slice of the solution.
Okay, so that's bucket one. Pharma tracking. What's the next revenue driver?
The second bucket is insurance and financial services. This is where they see about a $4 billion annual revenue potential.
And how are they doing that?
It's specifically tied to activating their edge networks in New York and Philadelphia.
So they're setting up the actual infrastructure in financial hubs.
Precisely. And this leads to the third bucket, which is their intellectual property. In 2025 alone, they issued 9 new patents, including a really interesting one for carbon credit tokenization.
Carbon credits. That feels like a bit of a tangent from pharma and finance.
It sounds like it, but it uses the same underlying tech verification. The market for carbon credits is, well, it's messy. There's a lot of fraud. If you can tokenize a credit and prove it's valid using their patent, that's incredibly valuable. This is their moat. They aren't just selling software, they own the method for secure tokenization.
Okay, the revenue targets are massive, and the patent portfolio sounds robust. But let's talk about the company's bank account. Ideas are free. Building infrastructure is expensive. If they're building networks in New York and Philly, that costs real money. What is their liquidity looking like?
This is where the story gets really interesting. They have a massive backer. Silex has committed a $150 million investment.
That is a significant safety net for a company trading at 70 cents.
It's critical. You mentioned the skepticism about growth. Usually, small companies grow by diluting their shareholders, right? They put more stock to sell it for cash just to keep the lights on. Of course. But because Silex put up that $150 million, Datavault has the cash to actually build the infrastructure without asking shareholders for more money right away.
That is a huge distinction. That changes the risk profile.
It dramatically reduces the dilution risk. It's essentially a war chest for construction.
That's a fair point. It buys them the runway. But let's talk about this moat again. You mentioned patents, but tech moves so fast. What's stopping a Google or an Amazon from just coming in and crushing them? Why does IBM need Datavault?
That's the big question. And it comes down to their proprietary platform. It's called Samcom.
Senken.
Santum. It involves placing quantum-resistant, cyber-secure nodes close to where the data is actually created. That's the edge in edge computing.
Okay, let's pause and break that down. Edge computing and quantum resistant. Let's take them one by one. Why does edge matter here?
Think of the cloud like a massive warehouse in Virginia where everyone stores their stuff. If a hospital in New York needs data, it has to travel all the way to Virginia and back.
Mm-hmm.
That takes time latency, and it opens up security risks during transit. Edge computing is like building a mini safe right next door to the hospital. It's faster, and because it doesn't travel as far, it's much harder to intercept.
Got it. So they are building these mini safes in cities. Now, what about quantum resistant? Is that just marketing fluff?
It's future-proofing. Everyone in tech is terrified that eventually quantum computers will be powerful enough to crack standard encryption, the kind that protects your bank account right now.
Right.
Datavault is building their nodes to be resistant to that today.
So if you're a bank or a pharma company dealing with patient data, you need that level of paranoia.
Exactly. You can't afford to be hacked in 5 years. So that's the primary moat. The secondary moat is the partners. We touched on them, but it's worth repeating. They're integrating with IBM's Watson X for AI data governance. They're working with NYIAX for insurance, and of course, Silex for pharma. These aren't just press releases. These are active integrations.
Okay, the moat sounds good on paper, but here's my counter. This entire model, this $200 million revenue target, it relies so heavily on execution. Specifically, they need to deploy these nodes. I'm seeing they plan to be in over 100 U.S. cities in the second half of 2026.
That is the plan.
That is a massive logistical headache. We aren't just talking about code. We are talking about physical infrastructure. Construction, software, hardware, local regulations, permitting. I mean, if they stumble on that rollout, that revenue target just vanishes.
You are absolutely right. It is a high-wire act. They have to move from being a software story to a construction story. But that is the nature of the bet.
Well, let's pivot to the charts and see how the market is actually pricing this bet. Because when I look at the price action, it is, well, it's ugly.
It has been a rough year. There's no sugarcoating it.
Rough is an understatement. The one-year total shareholder return is roughly negative 49%. As of late January 2026, the price is sitting right around 71 cents. To me, this looks like a falling knife. Why would anyone want to catch this right now?
I see the falling knife, but also see a floor forming. If you look at the last 30 days, the return is actually up almost 27%.
So a dead cat bounce. Or a legitimate reversal.
It looks like mean reversion volatility. Think of it like a rubber band. The stock got beaten down so hard, almost cut in half, that the selling pressure just exhausted itself. The rubber band stretched too far down and is starting to snap back.
Because at 70 cents, the company's valued so low that even a little bit of good news moves the needle.
Exactly. When a stock is sub $1, it sets up a technical scenario for explosive moves. It doesn't take much volume to push it up 10 or 20%.
That is true. Low float, low price, high volatility.
Yeah.
But is there any smart money actually buying this, or is it just retail speculation? Because if it's just mean traders, I'm out.
There are some strong institutional signals. Management was very active in January. On January 13th, they presented at the ICR conference. That is a serious venue. You go there to market to institutions, hedge funds, family offices, not day traders.
And right before that, on January 12th, they announced that IBM Edge AI expansion.
Correct. And then look at what Silex did on January 30th. They invested another $20 million into a company called Quantum Scan Holdings.
Which is part of the Datavault ecosystem.
Exactly. It validates the medical tech thesis. It shows that Silex isn't just parking money. They're actively putting more capital into the ecosystem to make sure this tech works. They're doubling down.
So Silex is doubling down. That is a strong signal, I'll give you that. It tells me they've seen the tech work in the lab and are willing to pay to get it in the field.
Yeah.
Let's bridge to the broader market perception. What is the sentiment out there?
It's a bit of a mixed bag, but I'd call it neutral to bullish.
Neutral to bullish. Explain that.
The headlines are neutral. You know, Company X announces Partnership Y, standard corporate speak. But the substance, the actual activity, is bullish.
Because the partnerships are actually going live.
Yes. Take that IBM collaboration we mentioned. On January 8th and 12th, they announced the activation of multi-city edge networks in New York and Philadelphia. This isn't a memorandum of understanding or a handshake photo op.
Oh.
This is real infrastructure going live.
Okay, so wires are being connected, servers are turning on. That moves it from vaporware to hardware.
Right. And then on January 14th, they integrated with fintech.tv to launch a bias meter and something called ADIO technology.
A bias meter, what does that even do?
It's a tool for real-time compliance and AI governance. It scans data to ensure it meets regulatory standards, basically proving that your AI isn't biased. It shows they're expanding into fintech compliance, not just sticking to pharma. It diversifies the product line.
Interesting. So if pharma slows down, they have fintech to lean on. What about the analysts? Usually when a stock drops 40% in a year, the analysts start cutting their price targets and downgrading the stock to sell just to save face.
That is the fascinating part. There is a notable absence of downgrades. Even with the price drop, the analysts haven't abandoned ship.
Which implies they're treating this as an execution delay, not a business failure.
Exactly. They are showing patience with the execution risk because they know it's an infrastructure play. Infrastructure takes time. You don't build a national network in a week.
Is there anything speculative that could really light a fire under this, beyond just executing the plan they've laid out?
Two things. First, RWA real-world asset tokenization. Everyone is waiting for the SEC or CFTC to give clear guidance in 2026.
This is the idea of putting real estate or gold on the blockchain.
Right. If the regulators give the green light, Datavault's patents make them a prime target for institutional asset managers. They will need a compliant, secure way to tokenize those assets, and Datavault owns the patent for automated compliance.
And the second catalyst.
M&A potential. With that patent portfolio and the edge infrastructure, they are a juicy target for a data giant or a pharma supply chain player who wants to buy the tech rather than build it from scratch.
Okay, we have to look at what could go wrong. We have painted a pretty rosy picture of the potential digital twins, quantum security, IBM partnerships. But I need to drag us back to reality. What is the bear case here?
We have to look at the risks, and they are very real.
Risk number one has to be that rollout. We talk about the 100 cities. The $200 million revenue target depends entirely on deploying operational nodes in 100 cities by the second half of 2026.
It does. Everything hangs on that.
Have you ever tried to get a construction permit in one city, let alone 100? That is an incredibly aggressive timeline. If they slip into 2027, or if they only get to 50 cities, the revenue misses and the stock likely crashes.
That is the biggest hurdle. Logistics are messy. My rebuttal would be that the $150 million from Silex removes the financial barrier. They don't have to fundraise to dig the holes or buy the servers. They just have to execute.
Money helps, but it doesn't solve bureaucracy. What about risk number two? Regulatory uncertainty.
This is huge.
The whole thesis rests on real-world asset tokenization. If regulators decide to clamp down on pharma or financial tokenization or just say not yet, that $2 trillion pharma opportunity and that $4 billion financial opportunity, they basically vanish, or at least they get put on ice for years.
You could. It's a binary risk.
Yeah.
But remember, their patent portfolio specifically covers automated compliance. They're building the tools to solve the regulatory problem.
So you're saying?
So if regulations get tighter, their tech might actually become more valuable, not less. They're selling the solution to the red tape.
That's a fair counter-argument. They're selling the shovels in a regulatory gold rush. But risk number three is plain old dependency. They're so heavily reliant on Silex. Silex is the partner, the financier, the validator. If Silex pivots or runs into their own trouble, Datavault is in serious trouble.
No doubt, it is a symbiotic relationship. If the host gets sick, the symbiont suffers. Investors need to watch Silex just as closely as they watch Datavault.
Right. We've looked at the massive growth potential, the scary execution timeline, and the technicals. It's time for the verdict. How are you scoring Datavault AI?
I am giving it a 7.5 out of 10.
7.5. That's pretty bullish for a penny stock with this much execution risk.
It is. The reasoning is the strong IP moat and the validated partnerships. Having IBM and Silex in your corner is a big deal. It validates the tech in a way most penny stocks never get. And the plans are fully funded. That's so rare for a company this size.
So what is the thesis for the listener?
It is an asymmetric risk. If they execute the rollout in the second half of 2026, the stock could re-rate from around 71 cents to the $3 to $5 range.
That is a 4 to 7 times upside.
Exactly. But and this is a big but,
Yeah.
you have to be willing to lose the 70 cents if they fail the execution.
And the time horizon here, this isn't a day trade.
No, this is a multi-year hold, 12 to 24 months. This isn't a quick flip. You are waiting for the infrastructure to be built.
So expect volatility. This is for patient capital.
Absolutely. You might see it dip, you might see it spike, but the thesis plays out over the next 2 years.
All right. To wrap this up, if you were watching this stock, what is the one thing you need to keep your eye on?
The node rollout in the second half of 2026, that is the critical inflection point. If you see press releases saying nodes active in Austin, nodes active in Chicago, the thesis is working. If you hear silence, then it's time to worry.
There you have it. A potential 7x bagger, but you have to have the stomach for the construction phase. Subscribe, like, and comment to stay updated. We will definitely be tracking that rollout as it progresses. Thanks for listening.
Thanks for having me.